hot sectors, and what's driving them. We're going to hit our picks of the week.
So we've seen weed really hot this week. Sundial went absolutely insane today and continued after hours. I didn't even know how much Tilray had ran until I looked at it just now with you.
Yeah, I bought one Tilray stock for giggles yesterday, and that's a few things I've been doing this week, is just buying things to watch them and paying the tax of them maybe going down if I'm watching them, but keeps it on my list. But yeah, I bought Tilray at like 30 something and it ran to 70 today. And I sold at the top, but I'm not giving myself any credit for that because I was just trying to move money around essentially.
And you're just riding the train.
Yeah, and a lot of that was driven by Wall Street Bets. It's not what it was in March. I liked Wall Street Bets a lot in March because it was just ideas of plays.
I liked it 2 months ago.
It was
before GameStop. It had some good stuff.
Now it's got some moderator issues where the old moderators were kicked, and the new moderators are. If you look at their Twitter, it's kind of annoying.
The new moderators are the people you hate on Twitter right now, still talking about GameStop.
Yeah, and you can't even talk about. You can't talk about SPACs on it either, which is killing me because it's deflating that market.
Right.
But yeah, weed plays.
The money's flowing into weed. Bio plays are heating up. Today was just a terrible day in general. The dip this morning was pretty scary.
But the thing is, today was weird. I mean, it's been a volatile year, and while indexes aren't seeing a ton, we're seeing a lot of big winners and big losers. So, yeah, I feel like I need to take my money out and make my picks in the beginning of the day, but I just don't have the time to do the DD on that. I'm starting to think waking up every morning and looking at Wall Street Bets and figuring out what they're pumping is the best move, but it's not the move that leads to your own independence in your investing skills or strategies.
It's not sustainable long term. As much as all of this isn't sustainable long term, you need to keep adapting your strategies.
Yeah, our podcast will eventually develop into something very smart, but for now it's going to be about keeping up with this current market.
Keep up with the market trends. I personally haven't really been chasing these as much. I did get in on some bio plays just because I'm pretty convinced. I like GOVX and VXRT just because they're both low caps. GOVX is micro cap. It's tiny. If that thing sees any kind of volume, I've seen $30 price targets on it. It's sitting at $6.75 right now.
So what's the deal with LOAC? I keep buying the bid-ask spread and making some arbitrage money essentially by, setting up some limit sells at the top of the range and some limit buys at the bottom, and they'll both hit by the end of the day. Just keeping my stockpile of shares is what's important.
They're my favorite low-key SPAC right now because it's so low. LOAC has actually been my favorite low-key under-the-radar SPAC for now. I know some people are looking at ones like BREZ that's kind of just sitting there.
Yeah, I've got about 100 shares of that. Hasn't done anything, which is kind of nice, honestly.
Yeah, LOAC has just been sitting there though. It's super low float, so it does move really quick. We saw it pretty well into the 13s and then it sold off quick. If you wanted to flip this one, all it needs is a little bit of volume, and then it moves.
Yeah, so keep a scanner up for that. Essentially.
That one's hit $19 before. My buy-in was around $11. I saw this thing, saw what it had done, and I'm not really holding a huge position, and I don't plan to make it too much bigger because I do think it's risky. But as soon as it runs up, I'm gonna flip it for whatever percent. I think it will run. It's just a matter of time.
Yeah, I only have 30 shares of it. It's going to run all at once like a lot of these.
Their merger's a legit company, though.
What's their merger?
It's 4D. They do some kind of cancer treatments, but they have a bunch of studies coming out. So really, they just need like positive results on stuff, and that thing will go. Yeah,
that's a hard thing to gamble on, but...
Right.
For example, what's that? I don't think I'm holding anymore. It has a treatment for Alzheimer's. I mean, it's not crazy good, but
Was that the one you said I had found for you?
No.
Never mind. That's different.
That was a BioStock one,
different.
But that was AUVI.
Yeah.
But they've got a research report, and I haven't had time to read it because I don't have time to read every single research report. Developing a crawler for things like that would be a very high level tool, but I've got some lower level tools to develop first before I get into that.
Right.
So on the same note of SPACs, we saw a lot of Chamath's SPACs, post-merger SPACs, kind of die out, which is killing me because I don't know if I'd even say die out though, because they dipped really hard. They're great buy-in prices right now,
especially after the short report. Yesterday, at least for Clove, was a big comeback.
Yeah,
it was pretty well into the 13s, then it looked okay, and then the market took that dump this morning, so we don't know.
I made a good bit of last week's losses back on that, and then I ended up selling around $13.50, about probably less than 10% of my holdings, but it's still 20% of my portfolio, if not more. But we talked about this in episode 2, is UWMC, LOTZ, and CLOV. And
LOTC was another one that yesterday looked like it was coming back, and today settled right back to where it had been.
Again, I did the same thing. I sold a bit, and I bought more today.
I haven't been selling. I've been holding.
But that gets us into our next segment about value investing. So opportunity cost is huge, and you don't want to miss the train. At least for me, I don't want to miss the train of the big spike in a stock that I own a lot of and am essentially wasting a lot of capital and holding in terms of opportunity cost, time. Just covered this in my master's class, and I've already forgotten.
It's the mental battle you have with yourself of whether something is going to make you more money if you don't touch it. I'm really confident that 6 months down the line, this stock is going to go way up, possibly like 10x, and I'm just so confident I'm going to hold. Or a matter of if you're going to jump on when it gets some volume, try to sell at the top, expecting it to dip. Because long term, you have to be comfortable with holding through those dips and holding through those times where it's steady. So it's really that mental battle between which one do I think is going to make me more money in the time. How confident am I that this is going to go up, and how confident am I in the time frame that this is going to happen?
Yeah, and I'm close enough to partition my account into 2 and have a day trading account and one that's very close to a day trading account where I can have my long-term plays and look at it a lot less than I look at my my day trades, so I can ride the wagon that is coming out of Wall Street Bets or FinTwit or wherever. I know that's not a sustainable way to invest, but I think right now it's what's going to compound your portfolio the fastest. I'm not a financial advisor.
But the other strategy is kind of doing both. So say something like CCIV, if you got in on that around $15, you're looking really good up at $35.
And that's swing trading.
Yes, that's swing trading.
Yep.
But you're seeing it at $35 and you say, you know what, I would like to sell this here because I've made a crazy return, but this merger with Lucid hasn't even happened. I think Lucid has a lot of potential, so I would be a fool to sell all of my shares. I'm going to sell some of my shares, half of my shares. That way you're mixing the two strategies and you're mitigating the risk on both ends.
Yeah.
You're giving yourself the buying power to keep playing, and you're keeping some out there for, I know this is going to go up. I'll feel like an idiot when I don't have money to invest in this later.
Yep, keep your buying power, but keep those shares of those companies that you value, that you think their revenue is going to keep increasing and that stock is going to keep going up. I'm not going to get into balance sheets or income statements on this podcast, but if you know how to read some of them, read them. They help. I mean, if a company's not making money, there's got to be a reason they're not making money, and that reason has to be research and development expenditures, expanding their market share, expanding capacity, things like that. So, a lot of these freshly merged companies should be taken off a little faster than they are because they've been established and privately traded for a significant period of time to get that merger deal with a venture capitalist that you are investing in that SPAC.
And that's the single reason people see so much value in the SPAC plays. It's because, okay, these are super legit. It's like I'm getting into a legit company at an IPO price. This guy with this much money wouldn't be throwing all this money at it. It's a matter of time before we see some shitty ones.
But maybe we'll be the first shit SPAC.
Maybe we're owning some shit ones. Who knows?
Yeah, and that's okay. It's hard not to call it a little bit of a bubble looking at... I have some Python code that just runs all my SPACs holdings, and looking at those overlays, they're all $10 forever, and then around October they blow up, and it's just something happened. Retail investors learned about SPACs, and more research needs to be done into this. I'm sure it'll be in financial textbooks in the future.
Sure, but GOVX is probably my favorite just in terms of upside potential right now. Definitely risky. It's low cap, low float. There's like less than 5. I think there's 3 million shares of this, like super low float. But if this thing sees any kind of volume, it'll go. It's a COVID stock, a vaccine stock. They have a single dose that is up for approval soon. So any single dose, I mean, the nasal spray ones are the ones that seem to be really heating up, but single dose is still better than all these that require 2. So if this one gets approval, it's going to fly. It's going to go nuts just because of how low market cap it is right now. VXRT is another similar. They're a little bit higher market cap right now, but same situation. They have a COVID vaccine coming out. Could be big.
I can't decide on which cannabis play I want to run, so I bought some YOLO today. It's up 10% on the day, which is fine. I mean, it's $3 on 30. It doesn't feel like as much once you get into those ranges with some of these initially lower priced stocks, but it can run up.
I mean, we both had you said you had a sundial call. I have an April 16th sundial call for $2. I bought this thing way back when. Like, why not buy one call? It's up 612%.
Yeah, I think
I wish I owned more, but
I think Fubo right now is a great buy. I think it's due for a 33% increase. It's at 45. I think it's going to 60. IDEX, I think, is going to blow up soon. And that's all I got for today.